Good morning. Welcome to this weekly edition of the Ag Market Network Market Report. Exports have just come out. We are going to go there right now and see what we've got just coming out here. Here we go. Starting with cotton, 217,600 running bales, down 25% from the previous week and down 9% from the 4-week average. Increases were reported for India taking 78,700, Vietnam taking 76,900, Bangladesh taking 26,000, Turkey taking 17,300, South Korea canceled 10,400, and then we've got new crop sales of 20,600. Shipments of 340,000. Those were pretty respectable numbers there. Cotton reaction, we were in July down 31 before the report. Right now we're down 33, so slightly lower. December cotton was trading down 19 before the report. Right now it is down 18, so slightly higher. Going to soybeans. Net sales of 382,100. That's up 41% from the previous week, but down 46% from the 4-week average. Increases were unknown destinations, 170,600. South Korea, 48,700. Indonesia, 46,600. So China has backed away in recent weeks. Reaction there. Soybeans were up 1 1/4 pennies before the report. Now they're up 1/2, so they've softened some. Now let's look at corn. Net sales, 947,600 metric tons, up 73% from the previous week and up 33% from the 4-week average. Japan took 365,200 metric tons. Mexico took 309,700 metric tons. Colombia took 144,600 metric tons. Corn before the report was up 1/2 cent in July. July right now is unchanged. December corn was unchanged before the report. Right now it is down 1/4. Looking at wheat, net sales of 317,700, up 16% from the previous week, but down 28% from the 4-week average. Nigeria took 77,800 metric tons. Unknown destinations took 69,300 metric tons. Algeria took 60,000 metric tons. Wheat before the report in July was down 3. Right now, wheat is down 4. So that market has definitely softened up. So we'll look at the markets again in just a second. I wanted to comment about what's happened here over the last week and get into something we don't normally do, which is to talk to farmers about some marketing ideas. First, let's just talk about grains and say, as far as our ideas there, markets are, especially in soybeans, November soybeans, are so below the cost of production. We're looking to possibly do some pricing or hedging on a rally, but we're a long way from that level. Right now, November soybeans are trading in the area of 9, 12.5. Most people would tell you $10 is breaking even. So as we go into planting time, the market is clearly telling you do not plant beans. Typically, you're at or above the cost of production at this time of the year, so the statement's a very clear one there. But if you are going to plant beans and look, you want to be doing some pricing or hedging, if we can get a good bounce over the next month or two, closer to the cost of production, just we're not there now. I'd apply the same thing to corn. I just want to see a rally there to make some considerations. The grain markets have reacted more to demand slipping and to big carryouts as opposed to a possible trade deal coming. With most of the news here in recent weeks being very positive, the market's become almost desensitized to that and doesn't really respond to it. Now let's set that aside and talk about cotton. Cotton's a little different, especially as you look at new crop, because these markets, old crop and new crop, have firmed up over the last month or two for a combination of things. It seemed to have embraced the talk about a trade deal in a more positive way than the grain and oilseed have. In addition to that, we've also seen wet weather. That's been of concern to some people in terms of planting and getting the crop planted in the Mid-South and the Delta. We have seen good demand. We continue to see it today. And we've seen big speculators, the big funds have gone from being short the market to actually starting to get long the market. All those things have been the positive for cotton. And we are right now looking at December cotton trading at 77.20. The highest that market has been, as we look back, I think it was it was last week. I think it was Friday. It got to 77.75. There was a time about 3 weeks to a month ago when we would have given anything to see it get up here to be able to do some pricing. Now people are thinking, well, maybe it can go higher, and maybe it can. But there are various analysts that are making suggestions to consider starting a program of doing hedging in December or pricing in December, whether it's going into the cash forward market or whether it's options or whether it's futures, whatever suits your needs. But perhaps considering doing 25% in this time frame and looking to scale up if the market continues to rally. Now, when it comes to options, you're buying a put. You're paying a premium. It doesn't obligate you. If the market takes off and rallies off of some new news, you're still able to participate to the upside. Now, you'll pay a price for the premium, and you have to realize that, but it's more like an insurance policy to protect the downside. That's something to really consider. This time of the year, between middle of April and the first part of June, seasonally is when cotton makes its high each year. So we're into that time period right now with prices at pretty good levels compared to where we were 2 months ago. You really need to think about this. You're not in the casino business. You're in the cotton production business. And it makes sense that you would consider doing some pricing at the time of the year when we see highs. Highs are this time of the year into early June. A scale-up program now makes sense. The lows of the year are usually made from mid-November to the 1st of December. So just be aware you're at that time period where it is a time traditionally to be looking to do some pricing. And I did look up this just to mention it to you. A December 76 put, and that's with December trading at 77.05, are going for 340 points. That's 3.4 cents. That's what it cost you to get a floor in for a 76 put. A 75 put's going for 2.8 cents. That's what it cost you to put a floor in there. If it takes off and goes substantially higher, then you've paid that premium, and that's what you'll be out if you hold on to that put. But you still have the chance to participate to the upside. I guess you can see I feel strongly about this. I do want to let you know this. Never done it. I'm going to give you a telephone number if you want to talk more about this or want more premium, more option information, even just an explanation of the basics. I'm happy to talk to you. Here's the number. It is my cell phone, area code 901-409-2909. Be happy to talk to you if you want some information about these markets. One last look. We've got the cotton has dropped some more. July cotton was down 31. Now it's down 51. December cotton was down 19. Right now it's down 32. We have July soybeans are up a quarter. They were up a penny and a quarter, both in July and November. Both of them are about the same here on the board, up about a quarter to a half. We've got corn right now at unchanged. Before the report, it was up a half. And then we have wheat right now trading in July down 4 1/4. That's down a penny and a quarter more than it was. So across the board, disappointment continues in these markets. So that is it. Thanks for being with us for this edition of the Ag Market Network Weekly Update. We'll see you later.